Welcome to another wealthmanagement.com Fast Chat. I'm Ryan Nauman, market strategist with Zephyr, an Informa financial intelligence company. Here with Stacy Morris, director of research, Alarion. So today we're here to discuss investing in energy infrastructure, which is really perfect timing as the low treasury yield environment looks to continue, which will be a challenge for investors who are searching for income. Additionally, how should investors incorporate MLPs and energy infrastructure in their investment portfolios? So that brings me to the first question for Stacy, who is an industry recognized thought leader in energy infrastructure investing. So Stacy, why should investors be looking at energy infrastructure?
Thanks, Ryan. As you mentioned, we're in a very low yield environment. It's very difficult to find yield these days, especially with so much of the market trading at or near all-time highs. So the yields that are available to investors are just pretty lackluster. So I would be encouraging income investors to take a second look at the energy infrastructure space. If you look across our energy infrastructure indexes, they're currently yielding around 6 to 8%. So the income there is very attractive, and yields today are slightly above the 10-year average, whereas so much is offering below average yields. So I would really encourage investors to take a look at the space because the income is attractive. But as we'll probably talk about, there's also other positives here as well.
Great. So how has the energy infrastructure space really evolved in recent years, and why would an investor get involved in that space now?
Sure. There's been a lot of positive changes over the last several years. These companies have spent billions of dollars over the last decade or so to really facilitate the growth in U.S. production that we saw in terms of oil and natural gas production. And now these companies are in a position where they're reaping the cash flows from those completed projects. They're spending a lot less money, and they're generating significant free cash flow. So some of these companies are using that excess cash flow for debt reduction, and then a number of them are also using it for buybacks. So there's been a lot of positive changes in this space and kind of a transition from a growth mode to now more of an efficiency mode and generating this free cash flow that's above and beyond, covering their distributions and dividends, which are already attractive. In the MLP space in particular, there's been a number of positive changes lately. Balance sheets have improved, governance has improved, and MLPs used to be somewhat prolific equity issuers in years past, and now they're doing the exact opposite and they're buying back their equity. If you look at our Alarion MLP Infrastructure Index, the underlying index for the Alarion MLP ETF, almost 70% of the index by weighting has a buyback authorization in place. So it's always been an income story and continues to be an income story, but we think there's an attractive total return story here as well when you think about the recovery that we've seen in energy, the free cash flow potential, buyback programs across the space, and then the fact that these companies are still trading at discounts relative to historical valuations.
Great, that's fantastic. So, energy infrastructure, MLP, they're very attractive right now, as you just talked about. And for this audience, the wealth management audience and their clients and investors, I think one of the most important questions now they're asking based on how your answers and your great insights is where does energy infrastructure fit in a portfolio?
Sure. So of course, it's a natural fit in an income portfolio with yields around 6 to 8%. And energy infrastructure can be a good way to diversify an income portfolio because it has relatively modest correlations with utilities, low correlations with bonds. But we also see energy infrastructure in the real asset sleeve of a portfolio. These companies are operating hard assets, and their contracts often have inflation protection built into them for inflation adjustments. So real asset exposure is another benefit of this space. We also see people use energy infrastructure for just their energy allocation in an equity portfolio. So if you're looking for an energy exposure that perhaps want a little more defensive or less volatile energy exposure, or energy exposure that has more attractive income, energy infrastructure can certainly fit that bill. And then finally, we also see MLPs sometimes in alternative asset sleeves. So there's a number of kind of different places where you could potentially put it. Income is obviously a natural fit, but there are other benefits and other ways to allocate as well.
So, you just mentioned all the great benefits that MLPs and energy infrastructure adds to a portfolio with yields, low correlation, and solid returns. But what for advisors or investors that want to own MLPs or gain exposure there, but don't want to deal with the hassle of a K1? What do you say to those advisors and investors?
Sure. So you can access the MLP space and not have to deal with a K1. If you invest in a product like an exchange traded product, for example, an exchange traded fund or an exchange traded note, you can get diversified exposure to the MLP space and a 1099 at tax time instead of having to worry about the K1. So I'd encourage investors who don't want to deal with the K1 or the complications of the K1 to look at the different product options. And specific to Alarion, if you go to our website, alarion.com, you can see on our products page a list of products that track our indexes, and we'll provide that 1099 at tax time.
Great, that's such a great insight. So, and maybe even most important out of all the information you just provided our viewers is, and you mentioned alarion.com, but where can investors learn more?
Sure. So, Alarion has long been at the forefront of the energy infrastructure space, and we regularly are putting research out on the space. You can subscribe to our research and view our recent research by visiting alarionandsnet.com. Again, that's alarionandsnet.com, one word, no spaces. And it's easy there to see our research and also to subscribe to our research.
That's great. And this is such fantastic insight, Stacy. I know I learned a lot, and I'm sure the viewers will also. So that concludes this Fast Chat today. So thank you so much for joining us, Stacy.
Thank you, Ryan. Take care.